Well, g'day everybody. Sam Marwood here from Cultivate Farms. We're all about making it possible for aspiring farmers to live their farming dreams. And we've heard about this concept of vendor finance for a while now, but I've been Googling it a lot and trying to understand it a bit more. And the other day I was Googling and I found the expert in Australia on vendor finance, and we thought, why not interview him to unpack everything vendor finance so that you are armed with another way of getting onto your dream farm, i.e. approaching a retiring farmer and telling them they should sell the farm to you via vendor finance. His name is Tony Cordato. He's from Cordato Partner Business, Property and Tourism Lawyers from Sydney. Tony, thank you very much for your time and welcome.
Yeah, hi Sam, great to be here.
Mate, we are really looking forward to this. We want to unpack everything vendor finance. So before we start, are you an aspiring farmer? Is this something that you've wanted to do?
No, but I love everything that goes with farms, and my wife's from a farming family, so I get
Yeah,
it.
but whereabouts is your wife from?
She came from a farm near Armatree,
Where's
near
that?
Dubbo.
Oh, wow. Okay. Huh.
Yeah.
Tony, why are you so passionate about vendor finance? What is it that makes you excited about it?
Because you get it's something which enables people to deal direct with a seller. A buyer deals directly with the seller and doesn't have to go somewhere else to get finance for what they're buying. So the idea is you talk, someone wants to sell, someone wants to buy. Why can't they do a deal together to work out the best way of financing the transaction?
I love it, and that's what we're about with Cultivate Farms is sort of this matchmaking where you get people to sit around a table and have a discussion about the best option for transitioning the farm. And if it's just between two parties, fantastic. You don't need to get a third or fourth party in, i.e., an investor or a bank. So that sounds exciting to me. So in the simplest forms, Tony, how would you explain vendor finance to someone on the street?
Well, someone's selling property. They might find a buyer at a price, and then they say to the buyer, well, now you go off and get your finance from somewhere. Now, sometimes they'll be able to get finance, sometimes they won't. If they can't get finance, the seller is stuck with the farm and the buyer is stuck with the fact they can't buy. And the idea is there has to be a better way. If we can just find some structures where the seller can talk to the buyer and structure a way where the seller finances the buyer, we have a win-win for both buyer and seller.
So an example of this, Tony, could be that, say, I've got enough for 20% of the farm property price, and I could hand that over to the vendor, and I would then own the farm from that point on, but owe that 80%, and we work out how to pay that off over the next 10, 20 years or something like that.
Yeah, I mean, that's 20% good, 25% is a good down payment. It's probably enough in many cases for the farmer to say, look, I'm happy with that, and I'll lend you the rest on favourable terms, not for nothing. You're going to have to pay some interest. Lend you the rest over 10, 15 years, which you can pay off as you make money from the farm. Now, I'm going to put the title to the property in the buyer's name, so that the buyer's responsible for the way the farm's run, for the rates and for everything else, and register a first mortgage over the property. I can take the property back and sell it again.
Okay.
So, I mean, that's what's called carry-back finance, first mortgage finance. Now, that's been used forever in country areas and for the sale of vacant land. And it suits everyone. You get cash up front, and you get a cash flow if you're the farmer because you're getting paid your instalments with interest. You get a retirement cash flow for 15 years. On a farm that you know, exactly how it works, so that if there's a default, you can take it back and resell it. You know it's worth it because it was your farm.
That's a really good point. So, so you talk about it. It has been done a lot in the past, and that's to me how it feels, Tony. That 50 years ago, 100 years ago, this was a common thing to do. But now it feels like not many people are doing it. Or I've heard of examples where people have tried to arrange it, and then the retiring farmers talked to their advisor, who said, "No, that's not a good option." So, can you give us a quick background on the history of vendor finance, and maybe whether that's true, it has gone out of favour, and why that might be the case?
Well, vendor finance originated because the banks were nowhere to be seen. So really, up until the 1970s, the banks were very tough in lending for people buying properties. They were okay if you're building, they were okay if you're improving. They weren't lending. You either had to save up and pay cash or come up with a vendor finance arrangement with the seller who would allow you to pay it off by instalments. And I've actually dug up an old book of mine, which I'll flash across the screen. It's Australian Law Journal. Here's the date, 1928, 1929. It's there it is. And in it, you'll love this, in it they talk about vendor finance. And it starts, in a large proportion of agreements for the sale of land nowadays, that's 1929, the purchase money is payable by instalments, sometimes extending over a number of years. This is particularly so with regard to sales of vacant land. So it was probably the most fashionable way of selling land at that part of the century. And it continued that way till the 1970s, when the banks had so much money they started to lend on vacant land, rural land. And that's displaced vendor finance for many years, and because it was there, it was available, and people said, well, yeah, I'm okay to take 100% of the price, even at a discount, rather than take 25% now and 75% over time. But the question I ask is, what are you going to do if you got the 75% of the price? Are you going to put it into a term deposit? Do you know what term deposits are paying these days? Oh, you're lucky to get 2%. Vendor finance is coming back because the seller can get 4%, 5% interest rate on a registered mortgage on their own land. It can provide them with a retirement income that 2% interest rate simply can't do.
That is a really good point. I love that. So it's a benefit to the new farmer in that they don't have to have the 100%, and they don't have to go to a bank. And to the retiring farmers, that ongoing income, which I know from my point of view, from my family's point of view, that's why they sold the farm, because they needed to free up cash to buy a house in town, but also then have to go find a job. Was the issue out of that, though. They had to go, mum and dad had to go find alternative work. But if they had enough cash...
The cash component obviously has to suit the seller.
Yep.
Yeah, so the cash, is, if it's 25%, whatever it is, it has to be enough to buy a home in town. So it's really, we're talking about vendor financing, the bit that you don't need right now.
That's a good way to think about it. Great.
So, if it's 25%, fine. If it needs to be 30%, well, that's what you ask for.
So that could
be 50%.
Yeah, so that could be the minimum way to think about it. So it also could be that you could, as a buyer, as an aspiring farmer, I could get a loan for say 20% of it to get it to that level that the retiring farmer needs. So there could still be debt involved here as well.
There could, but there comes a point that how profitable is the farming enterprise to pay for all the debt?
Yep.
So yeah, if it's very profitable, yes, of course you can. Uh, More often, that 20% will come as a gift from someone in the family. Maybe it's an inheritance. It'll come from somewhere, really, as a capital contribution, so that you're only paying interest on 75%, which you can cover if you run a farm well.
So on the point around the advisors not recommending, what do you think is going on there, Tony? Is there a culture of nervousness now around individuals creating an arrangement between each other that there's confidence in a bank to be able to manage this better than individuals? What do you think is going on?
Uh, Look, I don't think they know about it. They've not seen it in operation for a long time. There's no one who bought a farm in 1930 left
Yeah.
to be able to tell them it worked fine, or even 1970s. You find fewer people who bought farms with vendor finance in the 70s around. So they just don't know. But I ask you, what alternatives are they offering? And is it a term deposit? Is it a punt on the share market? What is it that's going to be better than 4%, 5% interest on a mortgage, which is registered as a first mortgage over your former property that you know?
That's great. So how do I? So Tony, let's say I found a retiring farming couple, and I've driven down their driveway a few times, and they like me, and I know that they're looking to sell. So what are the three things? And I think you've probably touched them already. What are those three things that I should come armed with to be able to say to them, I've got enough for a down payment for a certain percentage. Here are the reasons why vendor finance is a better choice for you than just selling on the market.
Well, you actually don't say the word vendor finance
Okay.
because people don't understand it. If I say collateralized debt obligation, who knows what that is? Only professionals know. So you have to just put it into nice, clear language. And what you're really asking for is, could you help me? I love your farm. It's beautiful. I've always dreamt about buying a farm like this, but I need some help from you to buy it with. And they'll say, what kind of help? I'll say, well, I have some of the money, but I don't have all of the money to pay for the farm. And they'll say, you have some of the money? Yes, I've got some of the money, and I could go out and borrow the rest of the money from a bank. Well, I haven't tried, but that's what I could do. Or I could borrow the rest of the money from you. But I've got to make sure that you are well set up in wherever you're planning to move. So what are your plans to move? And then you find out what they're really wanting to do with the money. If it's to buy a house in town, it's not going to take the whole of the value of the farm. There are other cases where they might be wanting to give some money to the children or whatever, in which case it may not work. But if it's a nice, simple, 25%, 30% is what would do them to buy a house in town, then you're going well. And then you say, and they'll say, well, so if I give you 25%, you actually put a figure. If I give you a couple of $100,000 now, would that be okay with you? And they'll say, well, I guess so. And they'll say, what about the rest? Well, I'm happy to give you an income stream for your retirement over 15 years. So what I'm going to do is pay you the rest by instalments over 15 years with interest. And then you say, well, how much interest? And then you'll say, well, how much are the banks paying at the moment on long-term deposits? And they'll come up with a figure, I'm not sure, but about 2%. Well, I can do better than that because I can give you 4%, 4.5%, 5%, whatever figure works. And that comes on top of the payments for the price. So instead of you lending money to the bank as a term deposit at 2% and they lend it out at 4.5%, you get the 4.5%. We cut out the middleman. That's what you're doing. You're cutting out the middleman because the bank's margins are 2 to 2.5% over the money they receive on deposits. And that is attractive in today's market when people are going to live at least 15 years after they retire, maybe more. And it's attractive to get a really good income.
Absolutely. Okay, let's say that I'm the retiring farmer now, Tony, and I go, okay, that sounds good. So I'll have cash up front to buy my house, and I'll have an ongoing income. Great. How do I know? What happens if you aren't a very good farmer, or what? There could be other risks. What are the other risks that I need to be aware of and can be on top of?
Well, you no longer have the risk about the farm because apart from having it insured as part of your arrangement, you don't have to worry about the fencing, the weeding, the pasture improvement, all that. That's the buyer's responsibility. What you do have is a registered first mortgage, just like the bank would have, over the title to the property. If they're in default, you give the appropriate notices of default and you can repossess and sell the farm.
Okay.
Now, that is a risk. You've got to check out that the buyer, of course, knows what they're doing in running a farm. They've got to give you a track record. Here's what we've done in the past. Here's how we run this place. And here's where the spare money will come from. I mean, they've got to show that. And, of course, you, the farmer, aren't really capable of assessing these people. So you go to a mortgage broker and say, look, would you be able to assess these buyers to see whether they're going to be creditworthy if I give them vendor finance? And mortgage brokers, know what they're doing, and they go through all the tests. They check people's credit files, they check people's credit history, they might check ABN history for 2 years, work history, all that kind of stuff, and just see that they're people that are capable of making payments.
That's good.
And I think that's where the fear is. People say, well, how do I know? And the answer is, well, you don't. You're just like, if someone came to me, I don't know. I practice law. I've got no idea how to assess someone for finance. So I call in the expert, a mortgage broker who does this every day. He does it for the banks. The mortgage broker assesses people for bank finance. He can use exactly the same assessment tools to assess people for vendor finance. Now, that overcomes the major problem. Are they going to pay me back? Well, you have that, and you have insurance over the farm in case there's a natural disaster of some kind. And that is your security, plus the first mortgage over the property.
That makes a lot of sense, Tony. So it seems to me there's 4 things. 1 is you need the insurance. 2, a mortgage broker. 3 is probably some sort of agronomist or farm expert to be able to unpack to know that you can make money off the farm. So there are three things. And then the fourth would be a law firm or a lawyer, Tony, just to step you through that whole arrangement, or is that a fourth person in this as
Yeah,
well?
that's the fourth thing. Yeah, now, most of the experienced lawyers in the country can help. Uh, they will have precedent in their precedent files to help and draw up the first mortgage, and they know how to register a mortgage on the title. So, they'd be a good port of call for people wanting to do it. So you talk to your existing lawyer now as a first port of call, and more likely than not, they'll be able to do it, provided you tell them, I've had the buyers assessed by a mortgage broker, and I've had their business plan assessed also, that it's a working business plan for the farm. And they'll say, well, if my job's only to draw up the mortgage documents, yeah, that's something I can do.
Great. So, and they can also go to Cordado Partners as well, Tony. Jump in.
Sure, yeah, and I do act for people in the country and people who are buying farms in the country. Um, transfer. Yeah. Another way of doing it is you can do it yourself if you want to transfer part of your farm to a super fund, and the super fund can pay you off.
Yeah, wow.
Super funds can't borrow, but they can pay off the price. So instead of getting bank finance to transfer to a super fund or to transfer to your children, and we're actually getting onto that second form of vendor finance, which to me, if you think of a loaf of bread, right? You buy a loaf of bread and you slice it up. Assume you have one slice of bread per month. So if you sliced it into 60 slices, that's 60 months of sliced bread. Now, if you're transferring property to your children or nephew or something like that, you may say, well, I'm just happy with the 60 slices of bread once a month over the next 5 years. I don't want any butter or jam on the bread. In other words, I don't want any interest. I'm just happy with the slice. And in that scenario, the property stays in my name until you give me the last slice of bread, until the last payment's made. So within a family, it's called an instalment arrangement, and they just one slice each month. And if they don't pay, well, it's all off, and the farm comes back to me.
Wow. So just, Tony, it feels like there's a lot of this is just down to conversation and some creative thinking. Um, you don't have to follow the norms currently of transitioning land. Sitting down with someone who's got some knowledge and experience in alternative options, and you could tailor a package any way you want, really.
Yeah, as long as it suits everyone. You've got to satisfy the needs of the seller and satisfy the capacity of the buyer to pay and to farm the property. It's got to genuinely work for both sides.
I agree, and that's exactly what we want with Cultivate Farms. We just want a win-win for all parties in the transitioning to land, and it feels like this is just another tool in the belt for aspiring farmers to have to get out there and be confident that they potentially could be living their farming dream through vendor finance. Tony, this has been great. I know you're very busy. Is there any final comments you'd like to make around vendor finance as we wrap this up? But to me, from hearing you, it feels like this is a really viable option. It's just not enough people know about it, and we need to get it back into the tool belt.
Yeah. No, it's something you have a good long talk with buyer, has a good long talk with seller, works out what they want, and then work the arrangement. The lawyer can document whatever arrangement you reach. Now, don't worry about how it's to be documented. You reach the arrangement, assume the documents will be there to support it.
That's great. And Tony, where can people watching, if they want to find out more from you specifically, how do they get in touch?
I think go to the website, www.vendorfinancelawyer, that's all one word, .com.au.
Perfect. Tony, thank you so much. We really do appreciate your time. Hopefully we'll get you on soon, even with a case study. We want people out there to work through a vendor finance, and we'll do a video and unpack how it all went. But I appreciate your time, Tony, and hopefully we'll speak soon.
Pleasure. Yeah, case study's a really good idea. If you find someone who's close to getting there, get them in, and we'll do a little three-way discussion.
Love it. Let's get in contact, everyone. Get out there and find your retiring farmers and get some vendor deals happening. Cheers.
Okay. Thanks, Sam.